Yo, what's going on, ladies and gents? I want to go over a couple trading tips, and this is going to be pretty basic in nature, but a lot of people don't understand this, and this can really give you an edge when you're making your trading decisions. And whether or not you're a day trader or you're a long-term buy and hold kind of person, and whether or not you're doing this with equities or securities in the stock market, or if you're diving into the crypto space, there's a few similarities and then there's also some differences that I kind of want to go over. But this strategy really helps give you the best sort of buying opportunities, and it gives you an idea of when you should enter a certain position. So I think my web page here is broken or it's frozen. So let me refresh this. And yes, it was. So now we're sitting at $10,722. We're on the 1-day chart, and I'm going to give you guys a little bit of a training sort of on the Elliott cycles. So if I can get this sort of figured out here. Okay, so I'll briefly go over what an Elliot Wave Principle is. So basically it's a form of technical analysis that finance traders will use to analyze financial market cycles and forecast market trends, basically by identifying extremes in investor psychology. They'll look at the highs and the lows in the prices, and then a few other collective factors. But basically this was this is a really good way to determine an entry and an exit position. And among other things, like this isn't the end all be all sort of method that you can use. I like to use these Elliott Wave Principles with Fibonacci retracements, and then also looking at volume, looking at the RSI indexes, and I'll go over a lot of this stuff in the future. But I just wanted to give you guys a really brief, sorry about that, give you a really brief demo on what this is. Where am I looking here? Oh, I'm all over the place. Here we are. Okay, so Elliott Impulse Wave, this is just on TradingView. Sorry, I'm a little lost here for a second. So I'll go over each wave and I'll give you an idea, and it's a little bit subjective in certain parts of this theory, right? You're going to kind of have to decide for yourself where each of these waves starts, where it ends, and there's a lot of different variations of these waves, but there's a few fundamental things that you need to be aware of, and then you can kind of go crazy and create all these wave cycles, and you can kind of narrow down your results, and that'll give you an idea if you were correct or not. And I recommend starting off watching this video, YouTubing other people, seeing how they're doing it, because by no means am I a pro at this. I kind of just taught this to myself a few years ago, but you basically will just do it yourself, watch the charts over the next few weeks and see if you're correct or not, right? So basically, the first wave, I tend to look for a little bit of a consolidation period, like something like this, right? It's consolidated for a few days at a time. This is a 1-day chart, so this is going for, maybe half a month or so, and it's just completely consolidated, pretty flat. So you pick a spot, and then you'll draw your wave 1, which is generally not obvious at its inception. So when you're sitting here and you're kind of going through this consolidation, it's very difficult for you to spot a wave 1 because it's not really going to look too big. It's not hyperbolic in any sense of the term. It's just kind of a gradual upslope, and it kind of puts you into this mindset of, okay, maybe we're going to be a little bit bullish here. So that's wave 1. Now, wave 2 is generally a correction of this wave 1. And so obviously here we have a bit of a correction, and you also had a little correction here, but it stayed pretty bullish going through. So that's why I didn't choose this top. So now we'll go down here to the bottom of wave 2. So this is something important to note. Wave 2, the end of this wave, cannot be lower than the start of this cycle. So it can't be lower than this 0 here. And the reason for that is, if it does go lower and this 2 wave ends beneath this 0, the starting point, then this Elliott wave cycle is false. It's no longer valid, and you can't use that for your your determination. You shouldn't be using an Elliott cycle if 2 is below the 0. So, and that has to do with support lines, different trends and different market psychology. If there's some really bad news in this area, say like the United States government bans all of cryptocurrency, well then clearly this Elliott bull cycle, this wave, will not continue to be bullish because everything is banned, and that really puts a damper on, the future of this bull run. So here you can see that we're above the starting point, barely, but it was a bit of a correction. Then we'll go to wave 3, and wave 3 is usually pretty large. It's a pretty big percentage gain, and you can use different tools in here to determine the percentage gain. I don't necessarily like to look at prices. I like to look at percentages. And in general securities, in the stock market and whatnot, usually wave 3 is like the largest wave. In crypto, I've noticed that wave 5 is generally the most hyperbolic and the largest wave in terms of percentages, and thus corresponding to a greater price increase. So wave 3 would go up to here. As you can see, this was a very large percentage gain from the top of 1 to the top of 3. We're sitting at almost 7,800 at the top of 3, and we're sitting at 5,000 at the top of 1. That's a huge increase in price, and that's what you want to see, right? This is clearly a bullish pattern. Now wave 4 is typically very clear that it's a large correction, and this may not look like a large correction to our eyes because this is on a 1-day chart, but I'm giving you an overview to start, and we'll kind of go into more detail in a little bit. But basically you're going from 7,800 down to 5,300. Now another thing to keep in mind on wave 4, when it corrects here, wave 4 should not end below wave 1, the end of wave 1, because if it does, there should be a support line, a horizontal support at this recent high here at 1. And if 4 drops beneath 1, this Elliott cycle is no longer valid, and you shouldn't be using it for your analysis. So this is clearly a pretty large correction. If you're sitting in and you bought in at 3, the top of 3, then you're going to be in for a pretty long ride. And you bought one Bitcoin at 7,800, and you're sitting at the bottom of this correction at 5,400. That's 40% loss. So you got to be really careful getting in on the top of a 3 wave. And you're kind of getting an idea of why this is important, because if you can start to predict what wave you're in, then you can sort of time your entry points. And you're never going to be perfect, but it gives you a little more edge against most people who are just seeing Bitcoin on the news, and then all of a sudden they're buying in, and a lot of people bought in up here at 20,000. So anyway, wave 5 is the final leg in the direction of the dominant trend, which is obviously a bull trend here. We started at 0. We're ending up at 3 over here, and then down to 4, but 4 is still far above 1. Sorry if I'm confusing anyone, but wave 5 ends way up here at 19,000. And you can see wave 1 wave 0, where we started, was at 2,500. Okay, if you bought in at the initial wave 0, right, the inception point, and you held all the way up to the top, you'd have $20,000 roughly from 2,500. Now you'd have to have endured all of these corrections in the market cycle, but this is what I'm getting at, is if you can make these predictions in a long scale, like a long term, like an eagle eye view. This is clearly a 1-day chart. This is not what I use normally to make these, but I recommend starting from a bird's eye view and getting an idea of what the overall trend is. And then you can zoom in and you can start to see, so we can go down to the 1 hour, and our Elliott wave is still up there. Okay. So clearly these look like a lot bigger market fluctuations here now that we're at the 1 hour chart. And what I'll do is I'll move this down a bit so we can get a better idea. But in here, you can start to play with your own Elliott cycles within the larger cycle. And this is something really, really important, because if you can start to get an idea, say you want to draw an Elliott wave in this area, this is a bit of consolidation right here. So if we want to draw one here and we start maybe in this region, is it not going to let me? There we go. So we have our wave 0, and this is going to be tough. This is really tough, but maybe up here to 1, a correction down to 2, and then we have our 3, our 4, and this looks more like a stock market trend because the 3 was a lot larger than the 5. So I don't necessarily think this is correct. And this is where it gets subjective, is people are going to be looking at this and saying, dude, that does not look like an Elliott wave cycle. You're completely wrong. And that's fine. You know, everybody's going to have their own sort of outlook on it. And that's why if it was universal, everybody would make money every trade. And some people do. So some people know this a lot better than I do. But this has really helped me be able to time my entry points. When I think I'm at a 3 wave, I'm kind of holding back and I'm not investing a ton at the top of the 3 wave because I know that there's going to be better deals at the end of this 4 wave. And then obviously you get to ride that 4 wave all the way up. And so and then obviously, so there's going to be corrections. At the end of a 5 wave, generally you're going to see these Elliott correction waves. So this would be an ABC wave, and you can get an idea here. So you have your A, and then I guess we can do this one, B, and this is the same thing. You can make 100 of these, and you can zoom it in and zoom it in even more. If we put this at the 1 day, because that's what we were using for the other Elliott wave, this might be a little easier to grasp. So yeah, this is a little easier. So we have our A, B, and then your C. And then clearly we entered a bit of another sort of bull run here for a few days. And personally, my opinion on this downturn, this was on the 6th. So I think on the 17th, I think most of this downtrend is due to the futures trading. I think a lot of the futures, the institutional banks took short positions on Bitcoin, and those are expiring January 17th and the 26th. So I think after the 26th, we're going to start a new market cycle, and I think we're going to be heading upward. I think we're definitely going to go into a bull run or a bull market, and we'll see what's going to happen there. But something that's cool is you can start. I've heard a lot of people who are talking about how we're in wave 3. We just ended wave 3, and what we're happening right here is actually a 4 correction. So I'll draw that out for you and show you guys the idea behind that. So if this is your 1 wave and then down to 2, this was the 3 wave, and then say this is the correctional 4 wave, and then what would happen, you'd have a 5 wave that it generally looks insane at the end of a 5 wave, but you could see it all the way up here at like 35,000 at the end of the 5 wave. And I completely see this happening, especially if the institutional investors go long on Bitcoin on their next round of futures, which will be expiring in end of February. And then if the price is up super high and then they go long again, I could just see this turning into a real long euphoric kind of bull run again. And that's something to remember is when you're at these 5 marks, start taking profits. When you're at the 3 marks, start taking profits. And that's how you're going to be able to know when to get in and out of a trade. So with that, guys, let me know if this was helpful at all. Subscribe to the channel if you haven't done so already. I'm going to be coming out with a lot of these different sort of just training videos, give people a little better idea on how to navigate this space. So with that, I'll catch you guys in the next video.